I'm Owen Bigland. This is the Inside Edge video blog. If you saw in the news a couple weeks ago, Charlie Munger, Warren Buffett's investment partner and friend for the past 35 some odd years, passed away at age 99. So there was a whole bunch of tributes to Charlie, and they talked a lot about him and Warren Buffett's partnership over the years, the companies they've bought, the philosophies they had on investing. I've talked many times over the years on Warren Buffett. I've read pretty much everything on him. One of the things I like best about Warren is just his keep it simple approach. If you sat down or met him and said, "Hey, Warren, how should I invest?" he would tell you, just go buy the S&P 500 and call it a day. And that is just incredibly good advice. That's all most people have to do. The financial media, MSNBC, CNBC, Bloomberg, they all will try and make it sound, and the investment professionals will tell you that that's way too easy. You need me, and they try and complicate things by buying this, selling that. Let's take a look at the economy. Let's take a look at interest rates. What is the Fed going to do this month or next month? It's all a colossal waste of time. It's a facade, and they're frauds, all of them. Don't take it from me. Take it from, this is what Warren would tell you. This is what Charlie Munger used to tell everyone. The late great Jack Bogle. Keep it simple. Buy the index. Call it a day, and you will beat 90% of the professional money managers that are all just chasing their tail and can't beat the index. And the kick in the head is they're spending 40-50 hours a week doing it, lagging the market and spending a full-time job at it, when you can just buy the index and call it a day and then work on your own career. Spend time with your kids, go work out, go on vacation, and you'll beat these guys on Wall Street sitting at their desk for 40-50 hours a week. It's nuts. But a couple of they were bringing out a lot of quotes of Charlie and Warren, and want to give you a couple of my favorite ones that I'll give you guys, and we'll kind of tie it into real estate here as well, Vancouver real estate. Warren always used to say, and Charlie, that wealth has grown over time, not all the time. This is so true. This is true in Vancouver real estate. You buy your principal residence sooner rather than later, is what I tell you guys. There's a good chance, hey, who knows, maybe the price of that condo or that detached house goes down $50,000 in 18 months. Maybe it goes up $100,000. Maybe it stays flat. Who knows? Who cares? You need a roof over your head. The alternative is to rent, and that's getting you nowhere. You're taking advantage of the only real tax shelter we have in Canada that's still left, and that's the principal residence exemption. It's minted more millionaires, as I've said here, than all other sources combined. You buy that house, you live in it, you pay it down, you sell it for $2 million 30 years from now, all that money goes to you tax-free. But markets go up and down. To get the superior returns of both Vancouver real estate or the stock market, what you have to sign up for is some volatility. It's not going to go up in a straight line. And I have to chuckle a lot of the people here on message boards and stuff. They always seem to want to wait. They never have an answer. They always tell you, don't buy Vancouver real estate. It's never a good time to buy. I've heard that for 35 years. 35 years, that's all I've ever heard, is it's not a good time to buy. Why would you buy? Crash just around the corner. I'm going to wait. They'll never tell you, though, well, when are you going to wait till? When? And when will I know to get in? How am I going to know when to buy in? Where's the bottom if the market goes down? They can't tell you this because they don't know. They don't know anything of what they're talking about. They don't. You're not going to time a market. And if you think you are, then you're crazy. You should read some books. Read some books on timing markets and trying to become a speculator. Instead, when you've got the down payment funds in place, you get pre-approved for the mortgage, you hire a good realtor who knows the market that you want to get into, you look at homes, you offer on homes and try and negotiate the best deal. Then you move into the house and enjoy it. And that's all you have to do. Pay the mortgage, maybe fix the house up a little bit, grow into it. Maybe in 10 or 15 years, if you need a bigger home, maybe consider selling it and moving into something else. Or if you downsizing or whatever, or even try and keep the house, buy your next one, keep that one and rent it out to avoid those friction costs. The PTT on the way in, the commissions, the conveyance costs, the GST perhaps, and the capital gains tax. Let that asset continue to compound unabated, tax-free. The other one one of the other quotes that I really love from Warren, he's got hundreds of them, him and Charlie. The most important quality for an investor is temperament, not intellect. And this is 100% true. I'm a prime example of that. I never said here that I'm any smarter than anybody else. Where I was smart was that I read a lot of books when I was younger and I studied the best. So I was fortunate enough to have some really good mentors both in real estate and in the stock market that I learned from. But then of course I also had to do a lot of my own due diligence to see what was best for me. But I figured it out pretty quick, and then I realized that you have to set a game plan and then you stick with it. You don't waver from it. Anything. If you guys have been watching my blog coming up to 14 years now, you know, my message has never changed. But I've been in this now for 35 years and my message has never changed. And that is buy your principal residence, keep it, enjoy it, let the capital gains grow. Perhaps down the road, buy an investment property, put a tenant in it, keep it, let the tenant do all the heavy lifting for you. When it comes to retirement, most of you should just index invest. I own a large portfolio of individual stocks and ETFs. But I like doing the work. I study the companies and everything else. But I've told you guys, over the last 20 years, I've almost come full circle. I'm now in the process of shrinking my overall share count and portfolio, selling a lot of the individual companies I own over the next 5 years. And in about 5 more years, when I'm ready to retire, the vast majority of my portfolio will just be in simple indexes through Vanguard and iShares. You guys should do that as well. Keep it simple. That's the way you're going to go. But Warren would often talk, the smartest guys, the guys with the PhDs and these economists and everything else, they usually make the absolute worst investors because they think they get cute, as it's known. They think they're smarter than the market. They think they can front run market corrections because they look at the tea leaves, the economy, the interest rates, what the Fed's going to do. Job reports, farm payroll numbers, housing starts. You can look at that stuff if you want, but as far as your investment portfolio, it's all a giant waste of time. I know that sounds crazy. There'll be some guys in here that are telling me, oh no, and you got to know this stuff. No, you don't. You don't at all. Buy the S&P 500. Every quarter when you get the dividend, just buy some more. You'll beat 90% of the guys that are doing all that studying, chasing their tails, all that other stuff. And this isn't just me telling you this. I got this from the best of the best. I've given you guys tons of book reviews over the years by some of these high level Wall Street money managers, private equity, home office guys. And with a lot of them, once they retire out of the business, unfortunately, they give you the real goods. The real goods is that buying and trading stock is a colossal waste of time and you're going to underperform the indexes. So don't even play that game. So keep it simple. Warren is, it amazes me sometimes why people take the advice of people off Twitter and YouTube and these anonymous bloggers that have no idea what they're talking about. They have no skin in the game. I don't think they have the net worth that Warren Buffett does. So why would you listen to them? I never did. I only listen to multi-millionaires and billionaires because they've already done it. Why would I listen to an anonymous guy on YouTube, even if he's got 2 million followers? Their game they're playing is clickbait. The advice they're giving is horrible. Just buy your principal residence, buy an investment property, get a good realtor, buy the right home. Don't just buy anything. Don't over leverage. Keep it. Let the capital gains grow unabated, tax-free. Same thing with your retirement funds. Put away, pay yourself first, put it into a low-cost ETF through Vanguard or iShares, and that's all you need to know. And then all that time you spend watching the news, the financial news, the economy. Some of these guys, I see some guys on the Vancouver Real Estate channels are talking about nuclear power and stuff. It's just a colossal waste of time. Keep it simple. That's what I've done, and it's worked incredibly well for me if you've read my book. I talk the talk and walk the walk here. I've got skin in the game, and I would never tell you guys to do anything that I wasn't doing myself. And I also wouldn't recommend anything on my channel here unless I knew it worked. And it does. Keep it simple. Temperament is the biggest thing. Don't get spooked when markets go down. Don't get too exuberant when they go up. Just continue with the game plan. Pay yourself first. You're going to do incredible over time. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.